All right, so we'll start with what fractals are, and then we'll move on from there. And then if we have time, I will share with you some secrets that will just help you overall trading whenever you're in the market. All right, so basically, a fractal is formed when you have 5 candles. For you to have a fractal, the fractal was introduced by a physicist, funny enough, not an economist, was a physicist called Bill Williams. So, and he proposed a theory that for those of you, pardon if you are not science or engineering oriented. So we know that usually when you have momentum, right, in one particular direction, as long as the momentum is sustained, speed will be sustained generally. Now it gets to a point, if it begins to meet heavier opposition, all right, it begins to kind of slow down. All right, things begin to slow down. So there's a deceleration. You can go to YouTube and go and Google it or go and search it out. It's actually called chaos theory. So the whole idea is that before price rolls over to the other side or to whatever side, there is going to be a kind of a slowdown or a deceleration. All right. And even when we look at money flow, you still see that in operation. So that there's going to be a form of deceleration, and then price would reach a tipping point, which he called a fractal point. So price reaches a tipping point and then rolls over. So we'll see something like this. So price is going up, going up, going up. It reaches a tipping point and then rolls over. Going up, reach a tipping point, rolls over. Coming down, reach a tipping point, rolls over to the upside. So basically a fractal point is a rollover point where we see price make a rollover. We are not interested in how deep that rollover is or how sustained the momentum is. We are not interested in all that. What we just want to know is that there was a rollover. Now, for fractals to be formed, like I mentioned earlier, you need 5 candles. And the idea is that for a fractal low, you need to have 2 candles to the right, 2 candles to the low, and the low of candle 3 is lower than the lows of the 2 candles to the right and the 2 candles to the left and the 2 candles to the right. So the low of candle 3, candle in the middle here, must be lower than the 2 candles here and the 2 candles here. So that is when we have a fractal low. And for a fractal high formation, the same thing has to happen. So you have 2 candles, you have candle 3 right in the middle. So 2 candles to the right, 2 candles to the left. The high of candle 3 must be higher than the high of the 2 candles before it, higher than the high of the 2 candles after it. So we basically call this a fractal. Call this a fractal high. So you have a fractal low and you have a fractal high. Now, why are these things important? So imagine some people, for this thing to happen, for price to roll over like this, basically what is happening in the marketplace is that there are buyers, people are buying. The buying power reduces with time because they can't keep pushing up. At some point, you are going to run out of people who want to buy at these prices. The people who want to sell will gradually begin to increase as price goes up. Of course, if the price of anything is going up, whoever is holding it starts looking for opportunity to do what? To sell. So if you bought somewhere here, maybe some institutions bought somewhere here and then it's going up. At some point, they'll have to take profit. So as to take profit, what happens? You sell. So if you are buying, by now you should know that your take profit orders and your stop loss orders are sell orders. So for them to take profit, they do what? They sell. So as they begin to sell, maybe there are some other buyers that are still interested in buying. It will get to a point that deceleration is taking place. It's going to get to a point, there will be more sellers than buyers in the marketplace. And what happens? We reach a tipping point and we would roll over. We'll reach a tipping point and we would roll over. So these sellers, where do you think their stop loss will be? Somewhere here. All right. As price is rolling over, where would the stop loss be? Here. Now, buyers step in at this point. So sellers come in and all that. And once it comes down a little bit, buyers feel okay. It's at the price where we're interested to buy. And buyers begin to step back into the market, gets to a tipping point, rolls over. Where would their stop loss likely be? Somewhere here. So fractal points are important because they give us an indication of where liquidity might be in the market, where stop losses might be in the market. All right. So that is why they are so important. They give us an indication of where the tipping point was. That tipping point is important because usually there will be a ton of liquidity resting around those tipping points. All right, please, just a moment. I'm recording. So now it's important to understand that the higher the time frame, I think I mentioned it in the last class, the higher the time frame, the more important the fractal points that form are. So fractals on the weekly are more important than fractals on the daily, more important than fractals on H4, more important than fractals on H1, and down the time frames like that. Now, the reason is very, very simple. Imagine someone is trading on 1 minute chart where there is going to be likely a lot of fake outs. What would the person do? The person won't trade with 2% of his account if he has any sense. He won't trade with 2% of his account. He'll probably trade with something like 0.1%. Now, the guy on 5 minutes is trading with like 0.25%. The guy on 30 minutes that is taking his entries on, or is framing his entries on 30 minutes, 1 hour, probably trading 0.5%, 1%, and on it goes. The guy that is trading on the daily, for instance, might be risking 1%, 2% of his account. Please, Apex, stop writing on my screen. Let me disable annotation. All right. So the guy that is probably trading on the daily has more money or is deploying more money into his trading activities than the guy who's trading on 1 minute. So if you want to get, if you are someone, a very big organization, and you are trying to get into the market for whatever reason, yes, the guy trading 1 minute is important, but the money he can give you or how much of your orders you can pair with him is relatively small compared to the guy that has a stop loss based on the fractal on 1 hour, or the guy that has a stop loss based on the fractal on H4. All right. So that is why those kind of things happen. All right. Now that we know what fractals are and all that, let's get into the fractal order flow strategy. So the fractal order flow strategy is very, very simple. It simply says we look for the last fractal that was broken, whether to the upside or to the downside, and we trade in that direction. We assume it's going to be continuing that direction. Why? I'll try to explain this as briefly as possible. So let's imagine we're in a downtrend like this, and we broke to the downside. Now, basically, usually when you have breaks like this, you usually tend to see that they are huge candles. Huge candles. Huge candles. Almost every time, huge candles. When there's going to be a change in direction, huge candles. Relatively, this one we're in an uptrend. So when did we break? Virtually broke here. So you could see this one was even a gap. Again, gap down. So you usually have those kind of big moves. Now, the reason why that happens is, now imagine you have your stop loss somewhere here. Maybe you are buying. All right, you have your stop loss somewhere here. maybe this is the low, so you maybe give an allowance of say 10 pips or whatever number of pips that you give as your allowance, and then your stop loss is somewhere here. Now, once that stop loss is hit, what do you think happens? You are going to sell. Your stop loss is basically a sell stop. When you are buying, your stop loss is basically a sell stop. So once these sellers mobilize enough resources to force you to sell, you join them to become sellers. And so the sell becomes more massive because there are more sellers now joining. Now, once all these sellers jump in at this point and have virtually eliminated all the buying pressure that is here, what should happen to price? Price should continue rolling over until another set of big buyers step in, which will be seen by another break of Fractal. So they blow through it, obliterate every other person that was trying to sell that hasn't collected its profits, and all of them are forced to become buyers, because when you are selling, your stop loss order is a buy stop. So you are forced to become a buyer and you join the buying gang, whether you realize it or not. The only difference is some people are going to make profit and some people are going to make loss in their own buying. So for you that your stop loss was hit, you're making a loss from your own buying. For these big institutional players that virtually started this move, are the ones that are making a profit. So we trade in whatsoever direction that the fractal has broken. Now, it's important to define your time frame of interest. I mentioned in the last class that usually, and I was referring to our dashboard. Just a moment, I don't like to see that line. I was referring to our dashboard, and I mentioned that usually H4, order flow on H4 is usually for intraday traders, those who have a relatively short horizon. I don't encourage you to go below H4 in seeking your buyers. Really, except you're going to be trading on 1 minute. I'm not encouraging any person here to be trading on 1 minute. So generally, your buyers should be coming from H4 and above. So H4 for people who are really short buyers, they are looking to short-term buyers. They are looking to enter and exit trades, usually within a day, 2 days at most. For the daily time frame is basically for those like me, and for a person who likes their time, who are primarily looking for weekly trades. So you're primarily looking to get to 1 or maximum about 2 setups every week, and you are done with trading for the week. So we are looking at the daily, and our exit time is usually anytime from 1 day to 1 week, depending on how price moves. And of course, the weekly are for the very, very big traders who are looking to exit positions in matter of weeks, months in some cases. So you need to define what your own higher time frame is. Now, I encourage you, when you are trading the H4 and it is contrary to the daily, to be mindful of the fact that at some point the H4 will eventually align with the daily. Remember, the higher the time frame, the more powerful the trend is, or your bias is. Now, you should also be aware that the H4 will usually change. If there's going to be a change in trend, the H4 will change first, the daily will change next, the weekly will change next. We'll still look at all these things when we begin to look at the strategy proper. So for me, basically, my first point of interest whenever I'm trading is to look at the daily. This is where I'm most interested in, because I'm basically looking for weekly setups. For those who are just new, I've mentioned before, I'm virtually trading the dollar via EU and GU. and EG. Full stop. All these other ones are just here for demonstration purposes. So for you, you need to define the pairs you are going to be trading. You can have them on this dashboard. So of course, like during the week, the bias on gold was bearish, and for a very long time this week, it just kept pushing on. I've mentioned I've never been able to figure out how to profitably trade gold. So I've just removed it from my trading since a long time ago, and I don't bother looking at it. But you could see that it was just pushing up, pushing up. This is the weekly open. So broke out. Usually when they have this kind of breakouts where price goes the opposite direction, for those of us who understand this, when they go the opposite direction, they're supposed to expand to the upside. But our main bias from our order flow is to go short. So this kind of setups, you just know that this week might be problematic, but eventually they still roll over and begin to face this direction of the order flow. So anytime, if you are just looking at H4 alone, you would have just been seeing buys, buys, buys. But as you are buying, be mindful of the fact that at some point, the H4, like it has done now, the H4 will eventually align. It hasn't reflected yet. The H4 will eventually align with, okay, 30 minutes. The H4 will eventually align with the daily. So you want to be mindful of that. While you are doing this as well, be mindful if your daily is opposite the dollar, you want to be mindful of the fact that at some point, if the weekly is possible, of course, as the daily has changed, that eventually the weekly changes, but it's still possible that that bias on the weekly is not going to change. And so you need to be aware as price is pushing up, USD is bullish. When we get to the weekly, you need to be aware of where selling pressure is beginning to come in to the market, or where selling pressure might be likely to start coming into the market. So last week, so that's, I'm not talking about money flow yet. So anyway, I expected that we might start having some selling pressure coming into the market this week. And as a result, even when we had this move here, all right, this particular push to the upside, I told people I'm not going to be playing this. And I think I mentioned it in the last zone. Once they take out the previous day's high, there is no point trying to buy. It's usually not them playing. They are usually not the people in the game. So of course, this push stopped for a while, and then you had this breakdown completely. So today was my own buying day. Just come here, pick your buy, run up. So mentioned, you go to the daily. We go to the daily on the dollar. We could see we were bullish, broke to the upside here. February, we got some nice trades here. I think we got some nice trades here. Then we broke down to the downside. Every push up is an opportunity to sell, push up, 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 opportunity to sell, and then we break through. Once we break it to the upside, every push down, there's a buying opportunity here on the 16th, is an opportunity to buy. And of course, they give us another one this week. So it's as simple as that. We are simply looking at the direction of the fractal break. All right. So once we've been able to identify our fractal break, we need to have a second time frame called an intermediate time frame. So for instance, if you are going to be trading the weekly for whatsoever reason, you decide to go and trade the weekly, you can make the daily your intermediate time frame. Now, what is the whole idea? You want relatively big amount of money. Remember, I told us in the last class that basically what we are doing in the market is to take people's money. That is basically, in case you don't know that, if you're offended by that, just leave trading alone. You are in the market to take somebody else's money, because money does not fall from the sky. It is coming from people's accounts. It's going to move from those who know how to trade from those who don't know how to trade to those who know how to trade. So basically, you are looking for where are people's money going to be at? Where are we going to have big money? So the guys that are going to be trading the weekly are not going to be interested in the peanuts that the people on 5 minutes, 15 minutes, 30 minutes, 1 hour have to give them. Those guys don't have money to give them. The people that have money to give them are the guys that will probably be trading the daily and maybe H4. So you want to have an intermediate time frame that you can target their own money. How? So let's say we're on the daily, which is the way I trade. And then we use an intermediate time frame, say the H4. So when we come here, what are we going to see? Now, the dollar, at this point, we have this fractal low was formed. It was broken to the downside. What happens? Some people will think, wow, it has been broken to the downside. It is time to do what? To sell. They've learned, maybe they let this other flow, or maybe they have other indicators, MACDs and all those things that tell them, oh, yes, be buying and all that. What happens? No problem. People want to sell? Good. As you sell, I am happy to collect your money. You sell, I am happy to collect. They break this. They say, wow, especially when they have this kind of huge move. Everybody's, if we go to FX Blue, you will see that a lot of people are shorting the USD. From beginning of the month, people have been short. From beginning of last month, people have been shorting the USD. And USD just keeps moving up. Would everybody, every break like this, any small break, people want to short the USD. And what do you do? As a smart trader, take all their money. So, except something happens, dollar is still going to climb back to this point. And every person who was a seller here who has not taken their profits will virtually lose their money. If we are going to have a break, and that is why when we are having this rundown, you'll see that there's no fractal low here. This is also another way to know when a trend might possibly be changing. You see that there's no fractal low in the vicinity. They are not going to change trend here. It's too difficult. It's too difficult to sell and then come all the way and maintain all the selling pressure to this point. It's too difficult. So what is going to happen? Even if they are going to change trend, we'll have today forming a fractal low, which means that Monday and Tuesday will be higher. And then they now reverse and come and break this. But you are certain that if they are going to do this reversal, they'll probably need to do what? Give you another 2 days. Not that I'm in the trade, me, I'm out personally. But you still have probably 2 days of bullishness before this thing reverses. But most likely, we'll look at money flow and see whether they are giving us any signal to get out of the market just yet. So that's basically how it works. So we'll pick an intermediate time frame, and on intermediate time frame, you want the order flow to be opposite to what it is on your bias time frame. So if your daily is bullish, you want H4 to be bearish. And that's one of the reasons why I created this dashboard like this. So it's a bird's eye view. It's a bird's eye view. So you could see on EU, our daily is bearish, H4 is bullish. That was the opportunity to buy. GU, daily, bearish. H4, bullish. Dollar, daily, bullish. H4, bearish. Earlier in the week, AJ. Before it changed bearish, I would show us where that was. AJ, the final day. So this day that it broke to the downside, it actually gave us a setup. And you could see that setup virtually ran up to go and take this out. So by the end of today, this would have changed back to bullish. And virtually all the JPYs, virtually, this one broke here. Basically don't trade NG. It has refused to leave my chart. Unfortunately, this one actually hit. I have these things on a demo account. Like I said, I don't trade all these things, but for the purpose of the dashboard, I've been taking some trades to show off the results. I think CAD JPY as well. There are some pretty nice setups on this week. So for those who are interested in all that. So basically you just go to your H4, wait for it to turn bearish, the order flow to break to the downside, turn bearish, you go to H1, now go to H1 or M30. So for me, if I'm using USD, if it's a USD pair, I'm usually on M30. All right. So for those of you who are in the current fostering program who understand swing short, you will know how I entered EU. All right, right at the top of that Asian range, and why my GU setup was there even though it wasn't picked up. All right, for others, you still have gotten your setup. So we are playing around, this was all Asia, 8 o'clock. All right, then we break Asia's low. This is the lowest bearish candle. We didn't close above it, we went back down. This was the new candle that was created, then we closed above it right here. So this is 1430 broker's time. So if you go to EU 1430, that's it right there. All right, so what was the bullish? This is the candle of reference. So you should have marked it up like this. All right, so NFP came, he just came back just before NFP picked you up. NFP came, he ran down to TP1, went back up probably to pick more orders, and then started running. Like I mentioned in the last class, one of the ways to know that you are on the right side of things, one of the ways to know that you're on the right side of things, once you take your trades by Friday, by close of market of Friday, you should either be out of your trades. That's if you're targeting 3R, you should be probably out of your trades or deep in profit. Why? So that no gap, no these weekend gaps, it doesn't concern you. You are fine. From your entry point to where price is at the moment is 52 pips. EU will not get 52 pips. So you are fine. Any broker that expands EU, your stop loss is where? Your stop loss is here. From where price is right now to where your stop loss is 76 pips. Any broker that expands EU by up to 50 pips, the spread, you should sue that broker. Something is wrong with him or with them. So one of the ways to know that you're on the right side of things is that you are deep in profits or out of your trades by close of the week. If the trade is still dancing around your entry, just encourage you to just, using this particular strategy, I will encourage you to close your trades. Just close the trades before the market closes on Friday. Now, the second thing that's told us will give you some tricks. Second thing that will tell you that you are on the right side of the market. Now, majority of people who trade the daily and occasionally some of those who trade H4, majority use M30 and H1 for their reference. Guess whose money they are planning to take? Any person who is using H1 for his frame of reference. They are primary targets. So if I change this thing to H1, just see that fractal. Once it changes bearish to the direction you are going to, you can go and relax. They will give you TP1. Once it changes bearish, so I'm trying to sell, I'm looking to sell, my bias is bearish. And maybe I've sold for whatever reason, like in this case, on 30 minutes I sold, and they break this. This is the fractal here. They break it to the downside. You can go and sleep. They will give you TP1. They might, after giving you TP1, they might come back and take your stop loss. No problem, you broke even. But they will give you TP1. And most likely they will go in your direction. It happens virtually like 95% of the time. if they break that H1 fractal or even the M30 fractal in your direction after giving you these weekly setups, you can go and sleep. So this was one here. The original trade they did, I didn't take it because they are taking the previous day's low before coming up to take previous day's high. But even if you took it, they broke this fractal to the downside. Go and relax. They will give you at least TP1. They will give you at least TP1. There was another setup on the 16th. They broke this to the downside and they kept playing throughout the whole day. They refused to break any fractal. That is usually a cause of concern if they keep doing this, but they're already giving TP1 here before the day closed. So no problem. We'll just watch whatever thing they want to do. And then they came in the following day, and right at the beginning of the European session, they broke that fractal to tell their fellow colleagues, hey, we are selling. Every person stay clear. And price rose over to the downside. You can go and check it on virtually all the other pairs. AJ was a bit nasty this week. So they just came in. First setup came very, very close to my SL and then left. Was it on this account that I took it? Anyway, no problem. But either way, while they are playing around, once they break that fractal, they are moving. JPY. This was it. They are playing around. Once they break that fractal, they are moving. You can see it. This thing plays out over and over and over and over. So you always want to be mindful of that. There was it UG? So, but basically, you can look at it everywhere. Even on gold, I think the same thing is playing out. Broke this fractal to the downside. Once they break it, they are moving. So you can do this. H1, the best, M30, tolerable. So most times, once they just break that fractal, so the kind of setups I love the most are setups that they give me that include a break of fractal. So when they gave this setup on USD, remember 1430? So once they gave this setup, we come to EU, you would have seen that it included a break of fractal. This is one of the best setups to take. Just gonna find that other block there, the highest bullish candle. They pick you up, they fall. I say that today's NFP was one of the most predictable NFPs I've seen in a long while. It was predictable from Wednesday, Thursday. But I'm not going into that. That is not what we are doing today. So it's as clear as that. So what you want to do is basically identify your order flow on the daily. Go to H4 to look for the opposite, right? So you go to H4 to look for the opposites of your buyers on the daily. And then you go to H1, M30, depending on your back test, go and do your own back tests. Depending on your back test and choose your entry time frame. So once price closes below the highest bullish candle, for USD, I've mentioned over and over again, I don't take setups on USD pairs, except I've had confirmation from dollar. Now, from experience as well, I have realized that EU, GU, UCHF are usually the pairs that align the most with whatsoever thing the dollar is doing. The Asian pairs or the commodity pairs, AU, NU, UCAD, tend to pay a lot of attention to what JPY is doing. I'll say that again. EU, GU, UCHF tend to align themselves mainly with the dollar, while the commodity pairs or the Asian pairs, AU, NU, UCAD, tend to align themselves more with what JPY is doing. So that is why, since one of my concentration is the dollar, I basically concentrate on EU, GU, because EU and UCHF are usually doing the same thing most of the time. if you understand the fact that they are opposites, but they are doing the same thing most of the time. And Chef can be tricky when it comes to their spreads, usually not on USD Chef, but I just avoid Chef in general. So that is that about that. So any questions before I move on to money flow? Any questions before I move on to money flow? Any questions before I move on to money flow? All right. So in the absence of any questions, now when you get to your money flow dashboard, you usually see monthly bullish, weekly bullish, daily bullish. Now, this is a bit different from what we have with the order flow. Now, the more all of these time frames agree when it comes to money flow, the better the setup is likely going to be. The more all of them agree, the better the setup is likely going to be. So for instance, you see that dollar, it is bullish, the monthly is bullish, the weekly is bullish, the daily is bullish. It basically means right now, virtually all the money in the market is aligned towards a bullish dollar. Virtually all the money is aligned towards a bearish EU, towards a bearish GU, towards a bearish AU, towards a bearish NU, bullish UC, and of course, you get the rest. Gold, of course, also being bearish. So this is to serve as a complement to your order flow. Now, whenever you are looking to buy, and one of these three guys begins to give you something contrary to what you are trying to do, be careful. I'll say that again. Once you are trying to buy or to sell, and one of these three guys begins to tell you, so for instance, you say, oh, dollar is bullish this week, so I'm trying to sell EU. And for one reason or the other, maybe your daily, which is derived from the H4, begins to flash bearish. It's a warning sign. You might take the setup, but it is a warning sign that, hey, it looks like some buyers or some sellers are beginning to step into the market. Be careful. So it's for you to determine what you would do in that particular case. Do you just close your eye and say, well, the other flow for now is still bullish, so I'll just stick with the other flow? Or do you maybe create rules to say, maybe I'll have my risk? If I used to risk 1%, I'll now risk 0.5% or something like that. It is actually up to you. So how is that derived? If we look at this point, we'll see, so this is a case in study. So as of the 11th, of May, you could see beginning of that 11th. So let me just close this so that you could see the values right there. So CMF. So you could see by even 3 a.m. that it has changed what's bullish. It has started giving positive readings. It's no longer negative. That is the first warning that, see, buyers are gradually taking over this market. If you are looking to sell, be very, very careful. And of course, every person trying to sell here got their ass whooped. So, and of course, we switch full bullish order flow changes at this point. We go to the daily. So this was the 11th, and then the 12th order flow changes. And from then on, we have clear skies. If you go to H4 here, which is where your daily volume is derived from, it is positive. If we come here, you will see the same thing. So we are started stepping, we are clearly bearish, 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 bearish. And then boom, we switch bullish. And then other flow changes here. And we are bullish all the way so far. Now, one of the things you usually see when the trend might be about to change, so I begin to wrap up this Zoom. Apart, one of the other things that you could do for those of you, I'll still drop this indicator for those who want it, is that you begin to see that with increased selling, your values are not dropping lower. So you notice from here, this was this candle. See the way this dropped. Look at the next one. See the drop. See the next candle. Instead of dropping, it's actually increasing. The candle was bearish, very, very clearly bearish. Here's the daily time frame. So it's very, very significant. So a whole day dropped. But what happened? Some people were buying. Some people were sneakily buying. The following day, they blew the roof. Now, for those who have heard me discuss the ATR bust, you will know that we had actually had an ATR bust here. And that is usually around when they build reversal orders. But that's a story for another day. Or for those who are in the inner house, when we start having our own Zoom sessions again, I think probably by next week or next 2 weeks. So that was basically what happened. And then, of course, we still had volume overall was still bearish. So once they tried to break here before, some people who were still trying to sell came in, tried to push it down, but the buyers were too strong. And eventually it broke to the upside. Now you could see that again here. We're seeing that again being playing out. You could see this push, push. They were selling, volume is still going up. Now this pushed down a little, but it looks like the volume here is already pushing it back up. So that's one of the reasons why I'm a bit that this probably will still be going back up. All right, so H4 here is still fully bullish, right? Still fully bullish. And for now, no signs of, so those are the kind of things you can do with your money flow. Your money flow just helps you to monitor when you probably want to start cooling down your interest. Or even without the money flow, if you trade your fractal order flow, if you understand your fractal order flow and trade it on its own, you'll be doing very good for yourself. You're doing very, very good for yourself. So that is that about fractal order flow and how to combine it with the money flow. So your fractal order flow, you want to basically define your time frame. So if you're an intraday trader, you probably be waiting for your H4 to align with your daily, because that will give you your safest setups. And then you take your intraday setup. So you just, instead of waiting for weekly high and lows, you are just looking for intraday setups, like probably this one or this one. So let's say, I think I've explained this in the last class, so you can go and watch that video. I think I really talked about intraday trades then. Our time is fast spent. So any questions? Any questions? When you get into your trades, one of the ways to know that you are on the right track, you should see them breaking M30 or H1 fractals in your direction, in the direction you are going to. Once they do that, you can go and relax.
I have a question, like from your explanation now.
Yeah.
If you are, for instance, with a value line and you have bullish on daily,
For this particular strategy, we are not using value line.
Okay. Now with this strategy, now when we look at the dashboard and we notice that okay, now this dollar is bullish,
Yeah.
it's an indication now that we should be preparing for EU for sale.
Yes.
Okay, now what if when the GU is bullish and we'll go for H4? You mentioned that when we go for H4, we should be looking at bearish momentum to see how we can get our entry to align up with the bullishness on daily.
Yes.
I want you to clarify on me there. I'm a bit confused.
Okay. The idea is this. Remember, we've taken the first thing we do is that we'll come to daily and we are getting our buyers from the daily. So if you don't have this dashboard, it's not compulsory you get a dashboard. The dashboard just makes your work easy. But what you can do is that you can write this out. I'm just saying this, it's not compulsory so that someone doesn't say because I'm trying to market my dashboard. It's not compulsory for you to get the dashboard. You can get paper and biro, and at the beginning of every week, you just come to your weekly chart. Just draw this thing. You just draw this line the same way you have it here. All the pairs you are interested in working with. Just write it out like this. Draw this weekly, draw this daily, draw this H4. And you just feel it. Beginning of the week, this is bearish. Or maybe you do this on Excel so that you can be deleting at the end of every day or H4 and all those things. So once you have your weekly, write down your daily. So now on the dollar, we've seen that the dollar is bullish. It means we want to sell EU. We want to sell GU. Dollar is bullish. We are trying to sell EU. We are trying to sell GU. That is what we are trying to do. So once you've gotten that, I now said that the next thing you will do is to go to H4. Remember, dollar is bullish. So I now said that on H4, we want to take the money of people who are just looking at H4 alone without looking at daily. So people who are looking at H4 alone, what they'll be seeing at this point that this thing has broken this fractal is that they'll be seeing that dollar is bearish. But we are coming from the daily, we know that dollar is actually bullish. So we will be waiting for people on H4 to start thinking that dollar is actually bearish. In other words, we want the order flow on H4 to be bearish. So the daily, which is where we're actually getting our own bias from, is bullish. But we want the H4 to be bearish. That will give us what we call a discount for us to be able to now buy at a cheaper price. So once we discover that, okay, this dollar now on H4 has turned bearish, we'll now start looking for our opportunities to actually buy. So this was how this week played out, for instance. The week started, this was Monday. They gave us this fractal low. Then they broke below it. That's what happened here. They gave us this fractal low, broke below it. Once they broke below it, this is the previous day's low, which corresponds with that fractal low. So once they broke below it, we start looking for opportunity to buy. So we are looking for opportunity for the dollar to be bullish. So once we see this lowest bearish candle being engulfed, this happened 15:30, we'll just go to EU. Look for that same 15:30. Where is it? That is it there. Look for the bullish candle that was just broken to the downside. That is it there. We'll draw our fibs. Price picks you up, breaks this on 30 minutes, which I told you was kind of a confirmation that yes, they have actually started moving in your direction. So they gave you TP1 and then give you your TP3, you're out of the market. They came back again. This was the weekly high. It came yesterday, broke above that high there, but did not give you any. This was already okay. I didn't mention. We basically look at this within the European. I think I mentioned it in the last class that I took. That we look at this within the European session basically, and then give us anything. We come here again. We are focusing on dollar. That was what we were just doing. This was Asia. Then we come again during London. This was the lowest bearish candle. They close above it here, 1430. You will just go to EU and go and find the 1430 candle. Where is it? That is it here. So you will look for the highest bullish candle before that break occurred, which was this, or before the high of the day was formed, or high of the week rather was formed, which was this. So this is the bullish candle before it. So you will just draw your fibs to mark it up. And then price came, picked you up, gave you TP1. Of course, it broke here, gave you TP1, and then it's running to the downside. We are not waiting. Let me clarify that again. We are not waiting for this break to happen before we enter the trade. It's breaking the order flow on 30 minutes or 1 hour. It's just like, okay, oh yeah, go and rest. We are really moving. We have intended to move to the downside. You can go and rest. So the main thing we are looking for is for our buyers, and then we are looking for H4 to be the opposite of what our daily is telling us. So that's, I hope that is clear.
Yeah.
All right.
Yeah, some people's audio is up and it's creating some noise. Philip.
Sir, can you hear me? Good evening.
Good evening.
The last one you explained, I didn't get it. That entry on today, I didn't really get it. That last bearish candle, that is not the last bearish candle now.
This is the highest bullish candle before the high of the week was created.
Okay.
On
Okay.
dollar, this is the bearish candle. This is the lowest bearish candle that was now engulfed. Yeah, so this is the lowest bearish candle that formed the low of the week, or before the low of the week was formed. So once price closes above it, that is basically your entry. So you go to your order pairs and go and execute on there. And I've mentioned why EU, GU, and UCHF are usually the best to align with the dollar, because AU, NU, UCAD, which are commodity pairs, most times align more with what JPY is doing.
Okay, but you said something about dollar pair, that if you are trading dollar pair, I didn't get it, that if you are trading dollar pair, you usually monitor something. I didn't really get that place clearly.
I mentioned that personally, that if I'm trading dollar pairs, I always monitor what the dollar itself is doing.
Okay.
Yeah. So usually I don't even bother looking at EU and GU. I look at dollar. If dollar is bearish and EU is bearish, I don't care that EU is bearish. I'm going to buy EU because dollar is bullish. So my bias is actually coming from what the dollar itself is doing, not what the individual currencies are doing. But most times, whatever thing the dollar is doing, usually EU and what just happened? Uh-oh, Bishop, I'm no longer co-host. All right, so that was basically what I was explaining there. So any other questions so that we can wrap up?
Evening, Prof. Please, I wanted to ask did you automate this trading strategy?
Which one?
Um, the first one you told.
The order flow.
Yes.
Yes, it's automated.
Okay. Please, will you let us know how much the subscription or quarterly, monthly or quarterly?
I'm still debugging it. Because the last time I was working with it, I noticed it had one particular error. I've corrected it. I corrected it within the week, but I still need to run it for a period of time to be sure that there are no other errors before start talking about that. And then I needed to include something because usually the way I trade, because I'm monitoring dollar to trade EU and GU, I was having issue coding it, but I think I've been able to resolve that now, where it can monitor dollar and then use it to trade EU and GU and where I normally trade. So don't worry, you will hear before the month runs out. If it's ready, I will let the house know.
Okay, thank you.
Hello, sir.
Yes, good evening.
Thank you for your time, sir. Please, if I may ask, how can we get the yesterday indicator, sir?
Bishop.
You mean yesterday high or low, or which yesterday are we talking about now?
The yesterday indicator shared by Bishop with us, the one plus one.
Okay, I haven't dropped it yet. I've had a busy day.
I
haven't dropped it yet, but over this weekend, I'll drop them.
Thank
Meanwhile,
you,
the videos, I've uploaded the video. I'm not sure if we drop the link on the Telegram. Let's all ensure we subscribe to the channel, like the video and comment. Even if it is very stupid, just do one comment there.
Okay, sir. I will do that. Thank you so much, sir.
All right. So for those of you who use whether even on your phone, you have fractals. So every person can use the fractal order flow strategy. Just make sure that your fractals are on. You don't necessarily need to. Some people told me I just trade on my phone. On your phone, you can put on the fractals and still see the fractals on your phone. So you actually don't need the only thing is that you might not be able to see the money flow, but you still be able to see the fractals, and you don't really need the money flow. If you would maybe just one or two losses from time to time, just take it. Even with the money flow self, you still take the losses when it will come. I told you guys on the demo account I was trading, CHF, JPY still hit stop loss, and then I start moving in my direction. It's still the way the market moves. So it's what it is. Just look at how bullish CHF has been over the last couple of weeks. So it's expected from time to time that those kind of heavy corrections will happen. All right, I think we are done here. We can call it a night. Thank you for joining.
Did you explain BXY?
Yes.
Oh, okay, great. For those of you that are new, you are young traders, if you go to our YouTube channel, I think we have a playlist for beginners. Let me see if I can share my screen quickly. Unfortunately, I think YouTube has made everything together.
I have a question. The execution I got in the group, I imputed it on MQ, and I tried to impute it on my MT4. It couldn't appear, or did I wrongly? I didn't put it well. Execution.
Have you watched the video?
I watched the video, but I just want to throw the question in the way I impute it on my
Where do you put it? In the indicator folder or the expert folder?
I put it in the indicator folder.
It's not supposed to be in the indicator folder. It's supposed to be in the experts folder.
Okay.
It's an expert advisor, not an indicator.
Okay, all right. That's why I made a mistake. I think I will impute it again. All right, that's what I want to know. Thank you, sir.
All right.
Okay. Good
All right,
evening,
so,
Bishop.
okay, go ahead.
Good evening, Bishop.
Hey. As I hear your voice like this, I just remember.
Now you remember you. All right.
Okay.
No matter. So what is another day?
Oh.
The dashboard. The dashboard. Where are we supposed to put that to?
You want to
In the
start
expert
work
folder.
something?
Okay, it's the experts too. Because I've been
Yeah.
having
It's
that
an EA.
challenge too. It's not coming up. Okay. Then please, when are you going to add us to the Heroes group?
Oh, that's true.
Don't worry, Prof will send the link to you guys.
All right.
So
Okay.
you can join
Then,
the.
Prof, tomorrow I'll be expecting your call.
Okay. No, well.
Okay. All right. Good night.
Night.
Now, Monu, I want to share. I remember me. This coded greeting.
Hey.
All right. So if you are new, come to Seven Figure Possible. Look for back to school newbies. Look for this. There are about 6 videos there. Watch it. Then go to this second one, back to trading school. Watch that too. Right. If you are new to trading, watch these 2. Thereafter, you can come to strategy review or simply just watch what we have done this week. I'll find time to upload all the other videos we had before the previous channel was taken down.